go. Let's go.
Welcome, Leadership Nation. We are on a journey to bring together men and women that believe in taking action in their own life in the areas of finance, family, and fitness. This is the Leadership to Wealth podcast, and I'm your host, Neil D'Souza. Today, I've got a guest for you guys that, oh my goodness, he can teach you. Do not let his age fool you. He might be young, but he's got a wealth of knowledge and information. He is an investor. He is a teacher. He is a mentor. He has a goal, a mission to reach and educate over 1 million people in the area of investing in real estate and getting them to take action in that area. And he's been investing in real estate for a long time now. I want to introduce you today to Steve Arneson. Steve, thank you for coming on the show.
Neil, I'm stoked to be here, my friend. Thank you so much for the invitation.
Thank you. And so, just to start off, you're a co-founder of the company REINVESTORS, right?
Yeah, you got it. So 2016 came around. A buddy of mine kind of dragged me to a real estate guru course that I thought for sure was a scam. It turned out, not to be. It totally lit a fire under our asses. And we ended up creating this company called the REINVESTORS, where, like you said, our mission statement is that we want to financially educate 1 million people, inspire them to invest into real estate so they can live a more fulfilled life. And so not only are we just helping people do that through the education platforms that we have, but we're walking the talk as well. And it's been a hell of a journey in the last 4.5 years.
Okay.
And I'm looking forward to diving into some conversation here with you.
Yeah. Okay. Well, then just before we jump in, let me just ask the question, since we've now mentioned it. If people want to get a hold of you, how do they contact you?
Yeah, we're on all social media platforms. The heaviest one is Facebook and Instagram. You can find us on YouTube as well. Yeah. Pretty much just search the REINVESTORS, reinvestors.ca, and then all of our handles are the same thing, the REINVESTORS.
Okay. Yeah, and I found you on YouTube quite easily, and okay, great. Okay, so before we get into some of the heavier questions, I want to ask a couple of rapid fire questions here.
All right.
Yes or no, or choose. What's that?
Some softballs.
Some softballs. Yeah, we're gonna throw some slow pitches here.
Yeah.
Are you ready?
I'm ready.
Okay. I make friends easily.
Fact.
I have a vivid imagination.
I'm creative, but not on the imagination side of things. More so on like I see it all and then be able to put it all together. But I need the tangible sight first.
Okay, interesting. I worry about things.
Not nearly as much as a lot of people around me.
I love large parties.
Yeah, I would say so. I think I'm a social butterfly in a lot of ways, so yeah. I can be thrown into intimate settings or larger pieces. And if I had to pick one, yeah, I'd probably be raving in a cave somewhere. So,
well, with a mission to reach 1 million people, I'm guessing you're gonna have to be okay with large parties. So,
yeah.
Which would you choose? Fancy shoes or fancy socks?
Oh, tough one. I love them both, but I got to go with the fancy kicks.
Okay, nice,
yeah.
Nice. Okay, so solving complex problems or sweeping the deck at your cottage out by the lake?
Man, can I do both? Like, can I be solving it in my head while I'm sweeping? Because that's the dream right there.
I've interviewed a number of leaders at this point, and that has been the answer for a number of them.
I believe it. Yeah,
solving complex problems. Well,
you can't shut it off sometimes, right?
Yeah.
So
yeah. And as you get good at it, you enjoy doing it, right? So you can tell your grade 6 math teacher that you love some word problems. You now love solving problems. Okay, so favorite hobby or sport?
Hockey through and through on the sports side of things, but I would have to lean back onto running for me. It would be
Okay.
just, it's always been my zen, my meditation, stress relief, time for focal points, letting things go. And
Yeah.
it's healthy too.
Yeah. Do you compete at all?
Compete against myself.
Nice. Nice. Spoken like a true entrepreneur.
Yeah.
Favorite book?
I think the biggest book that had the most amount of impact for me was Never Split the Difference. Um,
Yes.
just the best bang for your buck book out there.
Yeah. Okay. And a place in the world that you'd like to visit?
Hmm, the most southern tip of Chile.
Oh, okay. Any insight there you want to share with us?
I have a goal to stand on every continent,
Yeah.
and Antarctica and Africa are the only two to go. But I just have this vision in my head that I trek down to like the most southern tip of Chile and just like scream into the ocean kind of thing.
Nice. Who said I and you said you didn't have a vivid imagination.
It comes and goes.
Okay, so now do you have or what do you see as your superpower?
Um, I would say connectivity. I can get through to somebody or get a hold of somebody that a lot of people can't.
Okay. Nice. Connectivity is superpower. That's great. Okay. Well, there's the rapid fire questions. Now that we've lulled you into that space, now I'm going to ask, let's get into the questions about you as we talk about this topic of leadership. Where are you from? Give us a little bit of your background. Can you tell us a little bit about who Steve was as he was coming up?
Yeah, sure. So, just speaking on leadership briefly, I am not a natural born leader. It's something
Mm,
that I have to work hard on. And so, rewinding, I am born and raised in beautiful Victoria, BC. Long family roots here, and kind of a bit of a loner in school. Always just kind of focused on my own thing. Lots of sports, but I always had this drive for more,
mm,
and I didn't quite focus well in school because none of it really stuck out to me. None of it really intrigued me. But made it through by the skin of my teeth. Tested out a couple of university classes. Just did a variety of different pieces. Again, none of it kind of that I fell in love with. So just started working in a sporting good retail store, and it was two things that I loved. Connecting with people on a high energy basis, and then sports equipment. And so I got to talk to wicked cool people and about sports, and I'm a sportsaholic, so it was perfect for me at the time. Um, Built a lot of leadership there because I had to run the team, work my way up to managing the store for a few years. Um, and then the store ended up closing down for a massive renovation to the mall that we were working in. And I got to do a little bit of self-reflection, got to kind of look at my life and be like, all right, what do I want here? And at the time we were living in a dead end town, you know, only a few thousand people, pretty rough around the edges, I'll say.
yeah.
And I just saw that there was a limit to what I could achieve in this town. So I moved into the basement with my dad, back down in Victoria. My mom helped me buy a condo, and when I got established in what I would call my career for 7 or 8 years, I started um, building a global distribution network for
Mhm.
avionics.
Okay, well, let me pause you for 1 second. So when the store closes down, how old are you at this point?
I would have been like 19, 20,
Okay, all right,
20, yeah, 2021 maybe.
all right, and now you're launched into avionics.
Yeah, and I was thrown in the deep end at the time. I had a little bit of sales background just because of the retail position I was in.
Hmm.
Um, but I started off just in a customer service job, and the VP of aviation came over and said, "Hey, I see that you're doing really good work and that you got the right type of um, charm and work ethic.
Yeah.
Why don't you hop on my sales team and see what you can do?" And I was like, "Sweet, let's do it. What do I do?"
Yeah.
And he gave me the U.S. Department of Defense as my first number one client, and it was my role to basically go base to base to base on continental U.S.
Yeah.
and build back relationships that had dissipated through the crash of 789.
Mm-hmm.
DoD budget was cut significantly through those years, through the economic downturn. And so this would have been 2010, 11, I guess. And so it was my role to go and connect those relationships again and build back the business. And then DoD turned into 4 militaries around the world. 4 militaries around the world turned into Latin America. Latin America turned into Asia Pacific, and then a global reach as I built a business. Yeah. And so that was my first kind of like, here's all the reins, here's the tools you need, and just go after it. And when I was thrown into that position with the right tools and just the full control to go do what I wanted, I really thrived. And so that taught me a lot about, gave me a lot of confidence on building a business, so to speak.
Yeah.
And
I'm
then
sure dealing with military personnel had to have its own nuances.
It had its challenges, but it was, military people are some of my favorite people out there.
Yeah.
They're straight shooters. They like to have fun, but they're to the point and let's get it done.
Right.
And so they're not really tire kickers. And as much as I like to tire kick on building a relationship and getting to know each other, it was have fun for a quick little bit and then let's get down to business. Yeah. And great people for a guy like me to get connected with.
Yeah. And then how did you tell us a little bit about the transition from there into real estate?
There was 2 big things that happened. One, where the first kind of light bulb went off, was I was sitting at my desk in this job, and I turned around because I had a question for my superior, and I saw him, and he was standing kind of over me looking at his desk, and he was stressed out. And I had this like out of body experience of, this is my future. And I saw me in his shoes, 50-ish years old, 40 pounds overweight, working 80-hour weeks, barely sees his family, stressed out, traveling, 40 out of 52 weeks a year, making good money, but paying the ultimate price for it. Yeah. And I was like, this is not what I want for my future anymore. Yeah. And that was one of the first things that just had like in the back of my mind at that point. It was just like, you know what, start looking for other things, Wow. And then fast forward a couple of years, Randy, who was my business partner in the REINVESTORS, like I mentioned earlier, he dragged me to this like kind of guru course. And, we figured it was a weekend thing, cost us like $1,000. We're like, all right, maybe we'll learn something. Maybe we won't. At the end of it, we're like, yeah, we're building a business in real estate investing. And haven't looked back ever since.
Wow. So interestingly, I actually worked with the military for a number of years, and I had a boss who was older and had been there for quite a while. And then I ran into the situation where I looked at him and thought, wow, he's been here. This is what I have to look forward to. And I went out and bought an income property and realized what I made in the raise from in the money from that rental property, I was now making more than he was. And the light bulb came on and went, I can give myself a raise here. And, as opposed to being stuck to having to wait until someone else deems that you can have a raise.
Yeah.
Right.
And then the other thing that's really important to me is like culture. Like in lots of big companies, you can just be a number to it and you're dispensable. And, if it's a high stress position, as oftentimes sales can be, culture really needs to be high. And I've worked in positions before where culture was horrible. And as much as I hated it, it really taught me what not to do in business. And so I've learned a lot of lessons through just experiencing the wrong things and being like, all right, that's not the right way to do things. Just from, touching the stove and feeling it's hot. And, you don't want to touch the stove again. And same with the culture side of things is, I want to build something and I want to make sure that the culture is high energy, supportive and something that people want to be in and want to stay in to learn and grow and work together as a team.
And that's probably helped you in how you design your own company, how you design the culture in your company.
Yeah. I mean, we have we have a motto in our company, and it's basically a must. If you don't fit this motto, we're not going to work with you. And the motto is just go big to give big.
Yeah.
And so
It's
we
great.
as the reinvestors want to grow as big as we can through our portfolios and through our education and through just real estate assets, so that we can give as much as we can and give back to our support circle, our friends or family, but also like our favorite charities and organizations, because we know that if we can go make $1 million, we can probably make 2. And the more we make, the more we can contribute back to society and have a social impact.
Right. Wow. Okay. I'm going to make a note, and I'm going to come back to that because I want to hear more about that. That's go big to give big, right? Okay. I'm going to come back to that. So now you decide that you see your boss, you decide to make the shift after going to this weekend and learning a little bit, and you and your business partner, and you guys decide, hey, let's go ahead and do this. So what happens? I mean, okay, great, you get this idea, you decide this, but then what?
Yeah, so we invested into this training program,
Yeah.
and it was a bit of education, but it was more importantly an exposure to a massive network of real estate entrepreneurs and real estate investors across Canada.
Mm-hmm.
And that was what we really saw as the key investment. And so when we jumped into it, the structure is all about joint venture partnerships. So a working partner finding deals and negotiating deals, working with trades, finding tenants, et cetera, managing the property, partnering with a financial partner who can bring the money into the investment as well as like a qualifying power.
Mm-hmm.
And so when we originally looked at it, as a 27-year-old guy myself and 24, Randy, like we had a little bit of fear of, people going to take us seriously at a young age.
Right.
But how we worked around that is we just showed them that we're going to work harder than anybody else out there. And so when we connected with investors and potential partners, we made sure that, we appeared in the right type of light, and that we had the credentials and the confidence to make sure that this is going to happen. It's going to happen in a great way.
Mm-hmm.
And so when we first joined, it was mainly an East Canada type of network, but there was a few people here on Vancouver Island. And so we said, hey guys, you know what? There's not a huge real support group through this for people out here in the West. So we're going to establish that. We just saw a need for it. It was going to give us a bit of a light to these people. And we said, you know what we're going to do? We're going to start a meetup. And, we've been followers of Bigger Pockets for a long time. And like one of their number one rules is always, hey, if, you can't, if there's no meetup in your town that you can go get a part of, go start one.
Yeah.
And so there was 2 meetups that we saw in our town that was specifically about real estate investing. One was a realtor, and it was a little bit more pitchy. And then the other one was, a bunch of old 60-year-old white guys that had already made it, just sitting there talking about their boats and drinking scotch. And that wasn't really the type of feel that we felt welcomed into. And so we started off with 10 people, 12 people in the back of a restaurant. And we just said, hey guys, we're going to bring in Victoria's best real estate experts to come and teach us about their industry, whether it be law, accounting, a realtor, a broker, whatever. We're just going to facilitate it. So if you guys need anything, if you have any questions, send it through us. We're going to have the right circle to get that answered for you quickly. And so we just became the go-to people for finding out real estate knowledge. And it's not like we didn't know most of the questions, the answers to most of the questions that came up, but we knew the right people to go talk to. So, Neil, you'd send me a question, be like, hey man, how do I do this? Me and Randy would be looking at each other and like, do you know? No, of course not. So we'd send that to somebody who we thought would know. And then within 24 hours, we get back to the other person and be like, yeah, here's your answer. And like, holy crap, these guys really know what they're talking about. Little they know behind the scenes, we were just scrambling around trying to make it happen, but staying consistent and pushing forward through it.
Right.
And we really built a great family feel out of it. So we talked to every single person who wanted to be a part of this meetup, and we kept it almost exclusive because we didn't want people, sleazy car salesman type guys coming in there being like, hey, take my card, take my card, take my card. What can you do for me? Give me your business. And we really wanted to be the reverse of, hey, as soon as you walk in the door, it's like, what can I do for you?
Right.
and that go big to give big type of mentality of collaboration and support. And so over the years, we built it from 10 people in the back of a restaurant to our monthly meetups in person. We're like over 100 people on a regular basis in a
Wow.
small town of Victoria. Victoria's not very big. And it was all just because the right energy, the right people, and we surrounded ourselves with, top industry leaders here in Victoria. We ended up throwing a couple of really big events, and it kind of put us on the map for Western Canada for our brand and what we can bring to the table. And it all just came from experience. So we closed when we first joined the education group. We found that we were coaching our coach and we needed a little bit more. So we hired a mentor. We
Mm.
realized that we needed something. And so we went out there and found it. And
Wow.
so as soon as we hired that mentor, he was just the confidence that we needed to go and execute. We were stuck in that paralysis analysis space
Right.
of, looking back at it, we were doing all the right things. It's just that because we hadn't really done a successful JV before or any JV before,
Right.
we didn't know what we didn't know.
Right.
So having somebody super experienced to look over your shoulder and be like, yep, that's the right thing to do. Or guys, just shift it a little bit. Or what are you guys thinking? Like
Wow.
this.
Wow. That's all very powerful, especially as we're talking about leadership. I mean, not having the answers, but then being able to go and get them. I think that's such a powerful, overlooked, quality. A lot of people think that they always have to have the answers, but anyone that actually gets things done knows that they would rather have someone that says, you know what, I'll get back to you, and goes and gets the correct answer rather than giving a half-baked answer. And
Yeah,
so
exactly.
I think that's huge right there. And then of course you got that added to your own experience, your own knowledge, to be able to then go the next step.
Precisely. It ended up being, a four-way win. The person asking the question got the answer. We got, a question that we probably weren't even thinking about that we got the answer on.
Yeah.
And then, the expert that we reached out to, we would most likely connect the dots to the original question asker
Yeah.
and be able to, build a relationship that way and potentially business if it was, a lawyer, broker, accountant, whatever.
Right. Right. And now I'm curious about this because I love the part where you mentioned about mentorship. I think that it's vital, vital, vital for people to understand the power of mentorship. What had you make that leap to go, we need a mentor?
Um, it was a tough choice. We spent $18,000 to join that education group.
Yeah.
And then about 2 or 3 months later, this mentor approached us and said, hey, if you guys need more, like I'm putting together a really unique group, but it's 10 grand to join. And Randy and I had already kind of like pinched all of our pennies and like leveraged whatever we could to get into that initial group. But the thing that, pushed us over the edge is, are we committed to this? Is this something that we're going to do for a long time to come?
Mm-hmm.
And is this something that we're going to enjoy out of it as well?
Mm-hmm.
And all of those were yeses. And so we're like, all right, if we're going to go in, we're going all in. And so we
Yeah.
realized that the 10 grand spending on a mentor, we were going to make that back in the first deal.
Right.
And so it was an easy ROI aspect of it.
Yeah.
And for us, because we knew that we were going to go all in into it, it was just an easier decision the more we looked at it.
Right. Well, the ROI, the return on investment, it's powerful that you mentioned that, and that you mentioned the mentoring, because I think a lot of people don't understand or don't realize that what a mentor can do for you and how they can literally help you go to. And even if you just take the comparison of, if you were to start any regular business, and let's just say you said 18,000 plus another 10,000, there's $28,000. There's still so few businesses that you can start for $28,000 and come out making millions,
Mm-hmm.
right?
Yeah, I think your average like Tim Hortons or McDonald's is like $250,000 to start.
Right, right. And so really and truly, if people are honest with themselves, you actually got out really cheap. to get started in it.
I hadn't thought about it that way before. So yeah, thanks for showing me that. It does look
Yeah.
like that.
Well, I mean, doing the math, because people imagine the people that are thinking, hey, if I wanted to start a restaurant right now, which is not a great idea to start a restaurant right now, but what's $30,000 going to do? Nothing, right?
Mm-hmm.
It won't do a thing for you to get started in just a basic restaurant.
It's probably not even a yearly lease.
Probably not, right? And never mind what you would need and inventory and stock, all these things. Never mind tables and staff and all the rest, right? So
Mm-hmm.
even some of the most basic businesses, you want to start a convenience store, even something that you might consider really basic would be a lot more of an investment. And so to realize that you were able to invest and have someone teaching you and give you the shortcuts, that's amazing.
Mm-hmm.
When so many people would just say, well, I don't have that money, but instead you guys came up with, we're all in, let's go ahead.
We found a way to make it happen. And when we hired, his name is Ray, when we hired Ray, immediately after, we closed 3 deals in 4 months.
Wow.
And looking back into, we spent over 200 grand on our own mentorships, masterminds that we're a part of, business coaching, personal development, etc., over the last 4 years. And looking back at it all, it has allowed us, just in the short period of 4 years, to do 17 deals, all here in an area where everybody told us you can't find cash flow. Well, guess what, people? We're finding it and we're creating it. And, we've been able to raise $4 million in investment capital, more now. I think our portfolio value is over 7 million. So if you think about it in the grand scheme of things, the $10,000, $28,000 kind of starter was really just the first domino into creating something much, much more. And when you're picking the right people to work with, there is almost a guaranteed return as long as you're committed to it.
I'm going to ask a question that I've never asked before. What do you think would have been the cost of not doing the mentorship?
Oh, I know exactly what it'd be. I'd be sitting in the same type of sales role right now, probably pulling my hair out, trying to find a side hustle. And so we wouldn't have a portfolio. We wouldn't be, helping tens, dozens, hundreds, thousands of people with real estate through, our education systems. Randy would still be, journeyman electrician. Our life would be completely, I don't know, boring. And, we wouldn't have control of it. Whereas right now, my whole thing is I'm designing my life.
Right.
And because of the mentorship that we've gotten, because of the calculated risks that we've made and the commitment to what we're doing, we now have the ability to pick and choose what we want to do.
Love it. So speaking of picking and choosing what you do, let's go back to, I want to say go big or go home, go big and give big.
Go big to give big. Yeah.
Give big. Yeah. So come on, tell us a little bit about that and what the initiatives are, what kind of stuff you've done, what you're hoping to do with that.
Yeah. So it really started from a guy by the name of Cole Hatter. And Cole has an event called Thrive, Make Money Matter. And it's the #1 entrepreneur conference in the world. And Randy went to one a number of years back. And at the conference, Cole stood up and said, "Hey guys, we're creating a mastermind for like-minded individuals and people who want to grow a big business, but also have a really powerful social impact." And so Cole's model of Make Money Matter is kind of similar to Tom's Shoes, in the sense of when you buy a pair of Tom's Shoes gives a pair away to people in need and third world countries and places where you need them. And so Cole's mentality, he's built a great business, multiple great businesses. And he's like, if I can teach young entrepreneurs to make $1 million, I can most likely teach them the same types of systems, will create a second million. And if they can live off that first million and give that second million back, that's going to have an amazing social impact around the world. And so Randy called me up. I remember the exact time. He was down there, and I think it was in Vegas, and I was in Duncan at a Starbucks, and he calls me up. He's like, "Hey man, I'm jumping into this mastermind with Cole Hatter, and it's costing us 20 or 30 grand. I can't remember what it was." I was like, "What the heck is a mastermind? And what is it going to do?" He goes, "Well, it's just a whole bunch of, like-minded, go-getting entrepreneurs that want to make, the world a better place." And I was like, "All right, man, that sounds awesome. Let's go." And so through this group of people and through, Cole's passion and through just being surrounded with 100 people with businesses that have big hearts that want to give back, we talked about, this go big to give big movement and motto. And so we do it in everything that we do. So like our meetup that we started, 4.5 years ago, it was free for a little while, and then we started charging people. And then through coming into Thrive, Make Money Matter, we turned it into a for purpose. So we still charge people to come. It's like $10. So they get tons of value for that $10, but we take all of that revenue, we give that to Kids Sport Victoria.
Wow.
And so now for us, the commitment level completely changes. It's not just about us teaching people in our circles, how to live a more fulfilled life, but the more people we put in that room, the more kids we can put through sport. And for Randy and I, we both grew up through sports and are sportaholics, and we have to, we recognize all of the characteristics that we are as men now today that have stemmed from being a part of sports. So, commitment, goals setting, working as a team, work ethic, failing and learning how to recover from that fail. And so many other pieces all stem through sport. And so we're like, yeah, we got to tie ourselves to somebody, an organization like this. And so every business that we have has some sort of give back piece to it. And the most recent piece that we're, just starting to put together is more so specifically for real estate investors and landlords, where we're basically building like a pledge system where it's $10 a door. And so we're always looking for cash flow. I think our average cash flow per door is like $400 a door. And so taking $10 from that isn't going to make or break our portfolio. It's such a small drop in the water or in the ocean. But what we can do is scale that over our portfolio and friends' portfolios. And, through channels like this, we can spread the word and be like, hey, if it's $10 a door, as a whole, as a nation, we can come together and really make a huge social impact through, through organizations that give back to their communities. And something for us is that, if we can get 20, 30, 40 doors right off the bat, we can start sponsoring, single moms with, juggling jobs and need just an easy break where we can pay their rent, or we can give it back to Kids Sport Victoria or Habitat for Humanity, Pencils for Promise, whatever, like different places that just make true social change. And so not only are we, trying to build a very profitable machine in real estate so that we can live a more fulfilled life, but just as importantly to us is that social component as well.
Wow, that is immense, and thoughtful. That's pretty amazing. I've got to say, wow, I'm just really amazed by that. That is it. To be honest, I would say that it took me many more years to become that type of to get that type of awareness. And so I'm actually quite honored to hear you share that and to hear your vision that way. And we're going to do our part to spread that. Go big to, oh my good.
Go big to give big.
Go big to give big. I keep wanting to say the other one. Go big to give big. Go big to give. Forget the other one. It's go big to give big.
Yeah.
No, just out of curiosity, do you have a website for that, or is it off of, how do people find out about that if they want to?
For the most part, it's just like follow the hashtag go big to give big.
Okay.
But we're currently building a back-end system right now for the pledge system. And eventually, sometime in the next couple of months, we'll have gobigtogivebig.ca up and running. And you can learn more through the different channels on how we give back and how to get involved.
So you guys heard that. It's hashtag go big to give big, and
Yes,
and the website's coming soon. Okay, so what we're going to do now is we're actually going to head over to the wealth building portion, and
Excellent.
we'll close off the leadership portion here, and we'll head over there. So everyone that's listening, come and join us over there. All right, and we're back, and guys, we're so glad to have you. My name's Neil D'Souza, and this is the Leadership to Wealth podcast. We've got today on our show Steve Arneson, who is co-founder of the company REINVESTORS. And if you haven't listened to the first part of the interview, you got to go back and jump into that. But we're about to get into wealth building strategies that he teaches. And we're so glad to have Steve on the show. Steve, thank you for being here.
Man, my pleasure. I like that first half, and I'm just eager to get going on this one too.
Come on. Okay, so we're now talking about wealth building, and you took a business that was meeting in the back of a restaurant in you guys were doing meetups, and you've taken that and you've built it into a multi-million-dollar business. So, and you're a teacher, you're an investor, you're a teacher, and I believe you do mentorship as well. Come on, teach people that are listening that are, first timers, or, they want to get in. Where do people start? What do you teach?
Yeah, so listening to the first half, you know that I'm in real estate, and I'm a big believer that real estate is one of the best, if not the best, tool for wealth creation. I think that they're doing real estate right. Not that it's any kind of guarantee. I don't think there's any guarantees in life, but it's as close to a guarantee as you can possibly find.
Mm-hmm.
And so how we structure it is, if you're looking for a property, for us, an essential piece of it is it has to cash flow. And a lot of investors, if your property wasn't cash flowing, just especially through this pandemic time, you are hurting right now.
Right.
Lots of people have, lost pieces of income, if not all income, if tenants aren't paying rent, or, just partial pieces. And now you're having to, make up that extra bit every single month. That can hurt bad, especially if you're just a mom and pop investor kind of scraping by. And how we structure it all is insulated more. And so, if you have a property that's cash flowing $1,000 a month, that's fantastic. It's great that it can supplement your lifestyle, or, just go into a savings account. But even more importantly is it protects you in the downfalls. And in the downfalls is where you get made or broken. And so just from the get-go, I think cash flow is an absolute essential to the real estate side of things.
So do you take, when you're dealing with people, do people have to have a lot of money to come in and start investing with you?
Yeah, that's a great question. So no, not at all. Like, if you're starting in your own portfolio, there are creative strategies that allow you to buy real estate with none of your own money. And in the industry, the term
Come on, we've heard this infomercial before and on late night TV.
Exactly. 1 o'clock in the morning, you're
Yeah,
chowing down some popcorn.
That's right.
Yeah. And no, that's true, man. Like, when we first started, we had no idea that it was a real thing. And the more and more we looked at it, joint venture partnerships, OPM is the term, other people's money. And, at first it sounds like a scam. It sounds like, just something that, fairies are sprinkling dust over, and, Peter Pan is taking you to, never ever land, or wherever he goes. But, I'm living proof of it. And there's hundreds of people out there that are living proof of it as well. We started off with, Randy and I both had investment property ourselves, but we hit the ceiling of, we can't qualify for the next property. So even if we had cash, which we didn't at the time, we still couldn't buy property. So we had to figure out a way to buy another property. And through that came joint ventures.
Right.
And the basic of a joint venture is 2 or more parties that collaborate for a single goal. And so for us, our kind of tools and skill set that we're bringing into the partnership was, we knew how to find really great opportunities with significant ROI with very minimal risk. And we had exit strategies and whole, systems to mitigate those risks, completely. And we were able to find the deals, buy the deals basically, or at least lock them up with, strong negotiating, and we had the whole system on the back end to manage the renovations or the tenants or whatever all the way through the process. The piece that we didn't have was the money and the credit to go qualify for the property. So we sought out people out there who had those pieces of, here in Victoria, or your average home is, we're buying 600 and change. So we need somebody who could qualify for that type of mortgage and who had that type of down payment. And there are people out there that don't have the knowledge or skill sets to find those types of really good deals, but still want to capitalize on the returns that you get through real estate investing. And so together we're a match made in heaven. We get to bring our skill set of finding and creating those really great deals, and other people get a very passive approach into, into the returns of real estate.
Wow. The truest sense, a joint venture, right? Two people coming together, or a group of people coming together on a single venture.
Yeah, exactly.
Wow, that's awesome. So do you have people that maybe they don't have as much? Because you mentioned about working partners. So do you have sometimes people that, hey, say, look, I don't have money, but can I help on this side? Can I do more, put in more of my own efforts, and maybe someone else helps bring the money? Are
Yeah,
people
exactly.
like that able to come to you?
Yeah. So typically we work just with financial partners.
Yeah.
But we are starting a different type of partnership where instead of us managing the properties, we're actually partnering with another party to do all the property management and construction side of things. So that way we get less of the pie, but we get to focus on what we're really good at, finding new creative deals that give a great return, secure a great return, as well as, raising capital, building, our network of investors.
Right.
And so we get to eliminate, call it 30 hours a week by partnering with somebody else to manage all of that. And they're going to be very skilled at that. And we get to then go focus on what we're super good at. And together as a team, it creates just a great cycle and great synergy between us all to grow and scale faster.
Yeah. Well, so that's interesting that you mentioned that, because I can personally see some issues with trying to do it all right off the get-go, but I'd love to hear from you. What are some of the things that how you're seeing it and how it's showing up for you, that, hey, we could keep doing this, but we're now seeing the benefit, and you just mentioned about scaling. So can you explain a little bit about that, or why it isn't beneficial to try to do everything?
Yeah. So trying to do everything, you're kind of a jack of all trades.
Yeah.
When I look at a jack of all trades, I think of a handyman. And let's look at the income of a handyman. You're probably paying them, if it's under the table, I don't know, 30, 40, 50 bucks an hour. And that's kind of his ceiling or her ceiling. Whereas you look at somebody who drills down into one particular niche and becomes an expert in that space, they become a lot fewer and then in higher demand. And so their income is, 100 bucks an hour, 120 bucks an hour. And so if you can put the right people in the right seats in your business who are excellent pros at those, particular spaces, whether it be property management or finding deals or raising capital or the administration side of things, whatever, you're going to have a well-oiled machine big enough to that's prepared to scale. So I know that my skill set is not administration work. Not that I'm bad at it, I just friggin' hate it.
Right.
And so for me, if that was bogging me down 10, 12, 15 hours a week, I would much rather pay somebody to do that,
Right.
get it off of my stress level for one, and out of my to-do list, so that I can go focus on what I love doing, and, which is typically a higher return on my time. And so one thing that I just want to tell people is you don't have to be building, an empire. If that's not for you, don't do that. Don't feel pressured to go and buy, $100 in a year or whatever that looks like. If it's just something that you want to take on as, a part-time piece where you love the job that you're in, but you understand that you need to build a real estate portfolio to secure your future and your legacy, and you want to pick up, a property a year, I think that's a phenomenal goal. But you have to have the right systems and the right knowledge to put all that together.
Wow. I think that is so valuable. I think that's amazing because there's a key in there that people need to understand themselves,
Hmm.
because you don't have to go out and become this real estate mogul to be able to enjoy real estate. You can love the job that you do and allow other people, leverage yourself and allow other people to have some of the knowledge and have the skills and be able to, effectively diversify yourself
Hmm.
and get your money to work for you. So that's really powerful, because I think there sometimes it can be taught too much that you have to leave your job, when there's tons of people that love what they do. And it's better that you stay there and keep doing that, and instead create the partnerships and, like you said, the joint venture partnerships to be able to fulfill on some of those other dreams that you have.
Yeah, I'm a big component that, a big advocate that, your soul has to be fueled.
Yeah.
And so if you're like, for me, I was in a position that it didn't fuel my soul. So I had to shift and change, and I found real estate and, created a business and want to grow our business. And that fuels my soul every single day. I
Right.
may work 8, 12, 15-hour days on a regular basis, but I love it. And, I encourage people to find that piece that they love and just, dive in. And if real estate is that, excellent. If it's not, but you still want to build it as an engine for you on the long run,
Right.
that's very, very doable.
Right.
And so you asked early about like what somebody, I guess, newer can kind of start off with, or I just want to start off at the beginning on real estate side of things, just real briefly. You know, you may be your viewers or listeners might be asking yourselves like, why real estate over stock, or owning a business, or what else? And so I just want to comment on that real quick if I can.
Please.
So the way we look at it is we all need a vehicle for investing. And the way we see it, this is kind of cheesy, but it makes sense, is the best vehicle is a car,
Okay.
CAR. And the CAR stands for cash flow, appreciation, and the recapture of your mortgage. So your principal that you earn back on the property. And so when you look at it as a real estate asset in the buy and hold type of space, your cash flow, as I mentioned earlier, is a must. Don't buy anything that's bleeding your bank account,
Right.
unless you have unless it's going to be a flip, short term, or development property down the road. But mainly, don't buy it if it doesn't cash flow. And typically, the type of cash flow that we see, we're in that kind of 5 to 7% range. There are markets across Canada that have a higher cash on cash return. There are markets in Canada like the Vancouvers and Torontos and major metropolitans that will have a lower cash on cash return. So let's call it 5 for easy numbers. The appreciation is nationwide average of 3%. So your $100,000 house will grow 3% every single year. But it's not just 3% because the whole asset is growing 3%, but typically you only put 20% down or less.
Right.
So your return is actually magnified.
Right.
And then the R is your the recapture of your principal.
Okay. Teach
And
us about
so, pardon me?
Teach us about this. The
So
recapture.
the recapture of your principal is what your tenants are paying down on your mortgage every single month.
Yeah.
And so that's another word for it is equity.
Yeah.
Everybody, lots of people in Canada are equity rich but cash poor.
Right.
And so that's why I think cash flow, coming back to the basics, is so important. Is you got to make sure that you're building that engine so that if you were to lose your job, or if you wanted the freedom to be able to be like, you know what, I don't like this job anymore, or I want to take a job in Paris, France, or whatever, that cash flow will be able to give you more opportunities to do that. And so circling it all back around, if you're making 5% on cash flow, just for an easy number, let's say 5% on appreciation, and then your recapture of your principal is usually about 7%. So right there, just alone, you're making 17%. Like super easy. You can find those things all day long and bat them out of the park.
Right.
Good tenants, good properties, easy enough to find and negotiate to acquire. And so with that, there are, like, we always have to have, exit strategies in place. So if it's not going to, we're super conservative with all of our numbers as well.
Mm-hmm.
And so, if you're expected to make, say, $1,000 in rent, in our initial calculations, we're making sure we put down, $850 or something like that. So that if there is some sort of downturn like we're in right now, we're still covered and we know that this property is still going to work.
Right.
And so if you were to walk down the road and talk to any average Joe or Jane and ask them, hey, what is a really good return on investment? I would bet you that 8 or 9 people out of 10 are going to go, well, I'd love to make 10%, right? Anything double digits.
Yeah.
My TFSA right now that I'm just sitting with because I want liquidity in RBC, I think is making 1.5%. And, GICs and mutual funds, I think, even the stock, if you look at the stock market for the last 40 years, I think your average return is somewhere between 6 and 8.
Mm.
And so if you can pick up real estate assets that are easy to find and manage, that are bare minimum 17%, you're going to grow your wealth substantially and a lot faster with a whole lot less volatility. Because real estate markets don't drop overnight, they drop over time.
Yeah.
If you are in a depreciating market. Whereas look at March 16th this year, the stock took a huge kick in one single day. That does not happen in real estate.
Right. Wow. There's a whole number of things that I could get into there. I mean, I think that first of all, for those of us that have read Rich Dad, Poor Dad, or that, he always talks about, you don't put your money into a deal unless you know how you're getting it back out, right? Knowing your exit strategies. And he says, preferably having more than one way to get your money out. So, the recapture that you talked about, it definitely resonates for me, and I'm sure for any listeners that have read Rich Dad, Poor Dad. The other thing that I thought about there was, people are always asking the question, is now a good time to buy? And I think you've actually already addressed it, that you're going to be able to handle the volatility of whatever's going on, right? And you even build it into your models when you look at how it's going to cash flow. You build in the rough times. And so it sounds like to me that if people want to get started, it's probably the best time ever to get started, because you can see it in front of you to build it in.
Yeah, I mean, then I can't remember who says it, but the best time to plant a tree was 20 years ago. The next best time is right now.
That's right.
And so I actually did a video right as kind of coronavirus was really picking up, and it was, should I wait for the market to fall or should I invest now? Yeah. And it compared side by side the returns over 1 year and 5 years or something like that. It was a really great video. I'll send you the link so you can kind of take it in. But it's environment specific. Right. So if I'm just going to use Canada as a general. Victoria, BC has so many different industries supporting its economic factors that you could kick out tourism like COVID has. You could kick out government, and because of the tech and retirement, immigration, all the jobs we have here, military, etc., we're still in a position that you could take out our 2 biggest industries and our city still thrive.
Right.
There are places out there in Canada that don't have that. Right. I'm sure there's places in Alberta that are feeling it real hard right now because oil is taking a beating, and now with coronavirus, like more and more businesses are taking a beating. So that market might be going down right now.
Right.
We were just talking to a guy in Regina a couple of weeks ago, and he said, like, right now is not a good time to buy in Regina, right? And so you have to know your market.
Right.
But there's nothing preventing you from living in Regina and investing in Victoria.
Right.
Especially in a joint venture model, because you can have boots on the ground in Victoria, building your wealth for you while you're more of a passive approach, or you could be a more active manager. Either way works. But for me, it's real estate on our model, because we're buy and hold. It's a long-term game. You can flip. Typically there's a little bit more risk with that, because we started a flip in February, and then the pandemic hit in March. And so when we went to market in April, we were like, I have no idea what's going to happen here. We're either going to lose 50 grand or we're going to make 100, somewhere in between.
Right.
So there's that risk out of it. But from a buy and hold perspective, when you put all the right pieces of the puzzle together and you have the cash flow, you have good tenants, you have the good management system, treat your tenants like gold, And when you have all that in place and you wait it out for 5 or 10 years, you can't lose
Right.
because of the principal that you gain, the cash flow that you have, and the appreciation that's happened in, a smart, wise market.
Yeah.
There's never been a time in history where Victoria has lost or has gone down in value over a 10-year span.
Mm-hmm.
And so, finding those markets that will work for your model.
Yeah.
So is it smarter now to invest or wait? It's always smarter now in the
Right.
right area with the right strategy.
Well, the two things. One, I was thinking, um, with regards to the volatility, is it the right time, this, that, or the other? We know that in for people that understand some economics, if the government's continuing to take on debt like they're doing right now, and they're effectively right now giving out free money, right? That is going to be taxed at a later point, but just that alone will help to increase. There's a lot more factors, but just that alone will help to increase values, right? Because there's money out there. And so sometimes we see that reaction happen where prices are going up, not necessarily because the house is valued that much more, but because we continue to print money. But we
Mm-hmm.
won't go down that road. That's a whole nother economic discussion about currency that we won't get into. But um, I did want to mention that I also think there's power in actually investing outside of your direct vicinity. A
Mm-hmm.
lot of people like to invest, in a vicinity where they can go visit, but I think it's also a bad habit because then it's real easy to get sucked into that on a daily basis. Let me go see the place, let me go manage it. And what you start off with, sometimes it's better let someone else handle it. And if it's a little further out from you, you can't do that. And so you have to make sure that you hire the right people to manage your investment so that you're actually making money on your money rather
Mm-hmm.
than trying to go out and do all that work. So I think there's actually huge value in what you're talking about. Someone living in Regina and investing in Victoria.
Yeah,
That's
invest where the returns are best.
that's right. And well, that's where you want to invest. And there is no such thing as a Canadian real estate market. Um, Everything is regional and local. So
Yeah,
uh,
there's, like you mentioned, like on the economics side of things, just real quick, like there's macroeconomics, which is your global economics, where trades come into a factor, population growth,
yep.
migration, etc.
Yes.
New business, old business, oil, commodities, whatever. That's a
Yes.
global piece of it.
Yes.
There's next layer down, maybe it's just national, where in Canada we have our own policy, and that can change over time and be affected just from our own government perspective. And then each province has their own economy because they all have their own management, they all have their own ins and outs. And then
Right.
even smaller than that, you've got cities. And even just within a city in Victoria, BC, like there are places in Victoria where I'm not going to invest, and then there are places 3 blocks over where I would own every single one of those properties. And so there's macroeconomics and microeconomics, and you really have to have at least the basics of all of it to really understand where you should put your money.
Yeah. Wow. We could probably do a private webinar just on that. But we'll hold off. I want to actually ask a couple, as we're starting to round up here. What's next for you? I know you've got some big things going on. Can you tell us about what's coming up?
Yeah. One, we want to continue to give back and grow as much as we possibly can, but I think you're more so referring to the mastermind that we're putting together. And
Yeah, I heard just a little bit about this. Can you tell us more?
yeah, it's something that we're really, really excited about. So, over the years, you've already heard me talk about like the masterminds that we've invested in and the growth
Yeah.
that we've come from that, and we've learned just a ton. And we've built some really amazing friendships and some great partnerships and some great connections through the masterminds we've been a part of. But we haven't been able to find a mastermind that has elite level and established investors in Canada.
Right.
And so for the last year or so, Randy and I have been looking for this mastermind to invest into, to jump into a new level of circle network and surround ourselves with total elite experts. And it's our goal to always be like the dumbest people in the room,
Mm-hmm.
because if we're that person, we know that there's nowhere to go but up,
Right.
and we couldn't find it. So we figured if we're thinking about it as well and looking for it, but it's not there, there's other people across Canada that are looking to surround themselves with, established high achievers in real estate, building a business. And so because we couldn't find it, we're like, oh, F it, let's just go build it, put it
Yeah.
together.
Yeah.
And, put on the entrepreneur hat again, and just go create it and fill that void. And so we've partnered with a guy by the name of Darren Voros out in the Toronto market area. And we're putting together a exclusive invitation only, network of about 30 people who all have the same mindsets of collaboration, abundance mindset, support, growth, education, and are wanting to build, a cash producing machine through their business.
Right.
And so it's something that we're launching in September. You can hit us up or just check out synergymastermind.ca to learn all of the format and the details of it.
Synergy Mastermind, you said?
Correct.
Okay. Synergy Mastermind.
.ca.
.ca. All right. Sorry. Carry on.
And it's just going to be an elite group of people that collaborate on a weekly basis. We're going to bring in our mentors and our mentors' mentors to come and do 60 to 90 minute teachings and trainings. And we're really trying to put it together so we're the dumbest people in the room. Yeah. And we've got fund managers that are in, developers, people who have $1,000 under the belt and looking to do another 1,000.
Mm-hmm.
And so it's something that selfishly we just want more friends in high level real estate.
Right.
And how do you find those people when you get to this point? The higher you go, the thinner the air. And we just wanted to facilitate something that was world class, and for people looking for that same type of connection between other high achievers.
Wow. I love the mindset there. I love the mindset that, hey, if we can't find it, let's build it. I mean, that's powerful in and of itself, much less everything else that you've already talked about. But that's the Synergy Mastermind that you're starting. And when is that coming? When is that coming into reality?
So we're going to start at our first call is going to be in September.
Okay.
September.
Do we have a date on that already?
I think it's the 2nd.
September 2nd.
Yeah.
All right. September 2nd, Synergy Mastermind.
Yeah. So it's going to be a year-long event where we connect every week, and we're going to do a couple live retreats. So we can, because it's going to be people from all across Canada. Yeah. But we want to make sure that there's a face-to-face aspect of it as well, because you and I can build a deeper friendship over, 2 beers live in person, right, versus, 2 years over Zoom.
Right.
And so it's just something really special to that human interaction. And just real quick, on the note of creating it if you can't find it, my mom called me just a couple of weeks ago, stubbornly relentless. I just won't take no as an answer. And I think, when you have a deep passion for something, whether it be wealth creation through real estate or any other vehicle, or maybe it's just, you want to start a business, or maybe it's just, you're looking for people with similar mindsets, don't take no for an answer and just keep the pedal down and keep looking. Because if there's not a way to do it, you can go make one.
Well, now I know why I like you so much. So as a kid, my mom always used to tell me that I was stubborn as a mule, except she did it with an Indian accent. But she would call me stubborn as a mule. And, I always took that as a negative for so many years, until at some point it clicked in and I realized that stubbornness can also be determination, right? The flip side of it is determination, and you can keep going when other people quit. And so, but let me just ask you one other question about this mastermind. Qualifications, because you're sounding like this is not the entry level mastermind. This is for people that are already in the game. Or give us some who should be looking at this contact.
Yeah, exactly. So there's lots of great groups out there for people who are looking for their first partnership, looking for their first deal or second deal, looking to raise their first million, etc. There's lots of great support groups out there. But we found there's not a lot of groups out there or support networks for people who are already established and building the business. Right. So kind of credentials is you got to already have a growing portfolio, you're committed to the year and being involved in the calls and the accountability that comes along with that.
Mhm.
And you're in this for the long haul, and you want to build a business and scale the business. And
Right.
so if that's you, Synergy Mastermind is perfect for you. And we'd love to talk to you to see if you're a good fit for it.
Awesome. Awesome. And for the beginners out there that want to reach out to you, they can still reach out to you and find out about getting started in
Yeah, please do. Like
ventures.
the best place for beginner real estate investors right now is Facebook. Check
Yeah.
out, like, our Facebook group is called the REINVESTORS Community. There's one in Alberta called Fearless Investors. There's one in Toronto area called Level Up Real Estate. I think there's one in the Quebec area that's like REI Vision. And so, like, these groups are 400 people to 4,000 people, and you
Right.
can just hop in there, digest the content, read, ask questions, connect with people. And that's really one of the best ways to connect with other real estate investors right now. It's just Facebook groups.
Okay. Is there anything that we didn't cover? I think we
Oh,
covered the gambit.
there's tons that we didn't
Oh,
cover, but
wow. Okay. Yeah.
you can only
There's
get
a
into it so much
there,
for.
there's a whole bunch of, if we chose to go down each different avenue, I know that you could do entire sessions
Oh
just
yeah, I could
on.
talk about this all day.
Yeah, that's right. Okay, so we
The
talked
one,
about what's next. Let's mention it again. How can people get a hold of you if they're looking to contact you?
yeah, Steve Arneson. You can check me out on Facebook, Instagram. If you want to connect with our business, it's just the REINVESTORS. We're online, reinvestors.ca. All of our social handles are the REINVESTORS. And the one little piece I just want to leave as this is more so on that leadership aspect, but also on the personal growth train. And I think
Mm,
combined, it really ties in well to, like, wealth mastery. And one of the biggest things that I've recognized over the last couple of years, where I've done a lot of work on myself and on my business, consistency matters.
yeah.
And it can be great to book yourself a day to do a deep dive into something, but consistency, if all you can do is change grow by 1% a day, 1% a month, that's great. Consistency, if you commit to it over 6 months, a year, 10 years, it'll really change your life. And this is a conversation for another day, but you can look it up on other podcasts and stuff. I was on the edge of a 15th floor balcony looking over the edge. And one of the things that saved me was, 6 months later, I didn't jump, obviously, I'm still here. One of the things that saved me was like, you know what, I'm just going to do one thing a day that makes me happy or makes me a better person. And so I was super depressed at the time. I committed to just, one thing a day. And so the first day I went for a run, which I hadn't done for a long time. Second thing is I picked up a book. Third thing is I reached out to a friend, and it just kept on going and going and going. And the point I want to make out of this is, if negative is south and you're heading due south right now, all it takes is 6 months of 1 degree changes a day. And you can totally turn your compass around and head north. And it's just 1 degree a day. So that consistency and that implementation is just so important, regardless if it's in leadership or wealth. And I just wanted to make sure we touched on that before we closed out.
Wow. Wow. How do you drop that right at the end?
Teaser for next time, round
Oh
2.
my goodness. Yeah. I mean, that's a story that we'd love to hear about. We'll have to do it another time. Guys, if you want to check out Steve, you can find him all over YouTube. Lots of tutorials, lots of insight, lots of knowledge. You've got his website. Check him out. Steve, thank you so much for coming on the show. Thank you for sharing all of that. We're going to have to come back to that story about the 15th floor. I can't believe you dropped that at the very end, but thank you very much. We're so glad to have you on the show. And
My pleasure.
we really hope all the best for you. And the mastermind coming up September 2nd. Really looking forward to hearing about that launch and hearing about the good things that you're doing out on the west coast of Canada, from sea to shining sea.
Yeah, exactly. Thanks, Neil. This has been great.
All right. Thanks, Steve. Take care.